Hey everyone, welcome back. Today we're going deep, deep into the world of financial bubbles.
And we've got a fantastic guide for this journey. Jeremy Grantham.
Oh yeah, he's not just a successful investor, he's practically a historian of bubbles.
Decades he's been studying them.
And predicted a few too. Accurately. Spookily accurately sometimes.
He's calling this the most vulnerable market ever.
So yeah, lots to learn. We're going to look at how these bubbles, well, how they form.
The psychology behind them, all that.
And why it all matters. To you, to all of us.
Absolutely, because whether you're, already investing or just starting out understanding this stuff, well, it'll help you make, hopefully, smarter decisions.
But first things first, what exactly is a financial bubble?
Okay, imagine a house, right? Everyone suddenly wants it, desperately, but it's not really worth the crazy prices they're offering.
So the price keeps going up, up, up.
Not because the house itself is better, no. Because people believe they can sell it later for even more. That's a bubble, in a nutshell. Speculation, hype, totally detached from real value.
Like a game of hot potato. No one wants to be left holding it when the music stops.
Perfect analogy, and when it bursts, as it always does, well, those who bought in at the peak. Ouch. Biggest losses.
Okay, makes sense. So how can we spot one? Before it bursts, what are the warning signs? Red flags.
Well, Grantham points to a few indicators. One is this thing called the Shiller PE ratio, way to measure how expensive stocks are compared to their earnings historically.
Yeah. So like if I'm buying, say, a lemonade stand, I'd want to know its profits, right?
Exactly.
Right.
The Shiller PE ratio, it does that for the whole stock market. And historically, when it's really high, not good times ahead.
Not at all.
Nope. It's actually predicted some of the worst economic periods we've had. 1929, think about that.
Oh, wow.
The Japanese market, late 80s, the tech bubble, 2000, even the recent highs, yikes.
So when everyone's shouting, this time it's different, and just throwing money at the market.
That's when you got to be most careful.
Be afraid. Be very afraid.
At least be cautious, because remember, the market, it's not all logic. Emotions play a huge part, especially when everyone's euphoric.
Right. Right.
Yeah.
So we've got what a bubble is, some warning signs. But why do we keep falling for this? Why is this time is different so convincing every time?
Well, we're human. We're optimistic by nature. We want things to be getting better, especially our finances.
Yeah.
And when everyone else seems to be making money, easy money, FOMO kicks in, fear of missing out. It's hard to resist that pull.
Like that urge to jump in the pool on a hot day, even if you don't know how deep it is.
Exactly. And in a market bubble, that urge, it can be powerful, makes people impulsive, not thinking about the risks.
Forgetting to check the depth of the pool.
Ouch, yeah. Can lead to some painful belly flops when that bubble pops.
Okay, great image. So we've got the anatomy of a bubble, the psychology behind it, but let's get to what's happening right now. All the buzz about AI, these mega cap tech companies. Is this another one forming? Another bubble?
That is, the big question. Grantham has some interesting thoughts. First off, he recognizes AI's power. It is a revolution, technologically. Could change so much about how we live.
He even compares it to, like, the invention of the car.
Yeah.
The internet.
Yeah, exactly. Big stuff.
Yeah.
But E08, here's the thing. Those past revolutions, as exciting as they were, they came with periods of crazy speculation, overinvestment, leading to, well, you guessed it, bubbles.
So history might not repeat, but it rhymes.
Rhymes, yeah. And Grantham sees familiar rhymes popping up in this whole AI frenzy. He's not saying AI is BAD, to be clear, but he's saying don't get swept up in the hype. Don't lose sight of the fundamentals.
Don't confuse the potential of the tech with the frenzy surrounding it.
Exactly that. And that's where we'll pick up in part 2. We'll go deeper into Grantham's views on the market today, the specific risks he sees.
Sounds fascinating. Can't wait to unpack that with you in part 2.
Welcome back. We were talking last time about Jeremy Grantham and his insights on bubbles and, well, that potential for one forming around AI. Fascinating stuff, but, kind of unsettling too.
It is, yeah. Like watching a storm brewing on the horizon. You know it's coming, but how bad is it going to be?
Perfect way to put it. Grantham is definitely sounding the alarm, but he's also, trying to give us some guidance here on how to navigate these, well, turbulent times. He's particularly worried about this disconnect between the stock market and the actual economy.
Yeah, I've been noticing that too. We hear all this talk about the market booming, but it doesn't really feel like that's trickling down to well, most people.
Exactly. And Grantham, he uses this really striking example to show that. He points out that while stock prices, they've gone way up over the past few decades, wages, they've stagnated for lots of folks. It's like, the economy is this train, right? Few luxury cars speeding ahead, but the rest of it's stuck in the tracks.
Wow. Yeah. Powerful image. So the wealth, it's not being distributed evenly.
Nope. And Grantham, he argues this growing inequality, it's not just a social problem, it's an economic one too.
Yeah.
When a big chunk of the population, they can't afford to participate in the economy, it hurts growth for everyone.
Right, right. Like trying to run a marathon with a sprained ankle. You can hobble along, but you're not going to be at your best.
Exactly. And this kind of leads us to another big concern of his, the potential for a, well, population bust.
This one surprised me. What's that got to do with the financial markets?
Think about it this way. Imagine a company trying to sell stuff, but there are fewer and fewer customers every year. Hard to grow, right? Same idea with a whole economy. A shrinking workforce, that means less consumption, fewer people driving innovation, and ultimately slower economic growth.
So it's not just about picking the right stocks. It's about understanding these bigger forces that are shaping the world, the markets.
Absolutely. And Grantham argues that these long-term challenges, like, climate change, the inequality we talked about, and this potential population bust, they're all linked, you see. And they're going to have a huge impact on how we invest going forward.
So what does he suggest we do about it? Is he saying we need to, like, scrap the whole system, start over?
Not exactly. He's not anti-capitalist, but he's, well, realistic. He sees that a system designed for, unlimited resources, unlimited growth, it might need some tweaking, especially in a world facing resource constraints, environmental problems. He thinks we got to rethink our assumptions about growth, find more sustainable ways to create prosperity.
I'm curious about the role of government here. Where does that fit in for him?
This is where it gets interesting. Grantham, he's not afraid to suggest that the government, it does have a role to play in tackling these long-term challenges. He sees it as a counterbalance, to the market's focus on the short term, the next quarter's profits.
But wouldn't that, stifle innovation, limit individual freedom? I hear that a lot.
It's a common concern, yeah. But Grantham, he says that's a false choice. He thinks that smart regulations, they can actually HLP innovation by creating a level playing field, by encouraging investment in sustainable tech.
So not about control, more like setting the right conditions for long-term growth, sustainable growth.
Exactly. And for him, this is key to addressing those, what he calls tragedies of the commons we mentioned before, problems like climate change where, people acting in their own self-interest end up hurting everyone in the long run.
Starting to see how all these pieces fit together now. So be mindful of bubbles, understand the limitations of the system as it is now, and consider that maybe government does have a role to play in getting us on a more sustainable path. Did I get that right?
Spot on. And, we're going to dive even deeper into some of Grantham's more controversial, thought-provoking ideas in part 3. So stay tuned for that.
I'm ready. This is all so incredibly insightful. Welcome back to our final part, diving deep into Jeremy Grantham's world. Ready for those controversial ideas you mentioned?
Well, Grantham's famous for his long-term view, and he doesn't shy away from challenging the usual way of thinking. He's been called a perma-bear, actually, because he's often so cautious about the markets.
So not just a bubble predictor, he's thinking bigger picture,
Yes.
like the whole system, how sustainable it really is.
Exactly. And one of his, boldest ideas is this. We need to change what we even mean by progress. He says this obsession with GDP growth, it's misguided.
Because it doesn't account for, the environment
Oh.
or using up natural resources.
You got it. He's saying we're measuring success with the wrong yardstick, focused on short-term gains, even if it hurts us long-term.
So we need a new yardstick then.
He thinks so. We need to move beyond GDP, start measuring progress based on stuff like environmental health, how well people are actually doing, genuine improvements in our lives.
It's a big shift in perspective. Hard to even imagine what that'd look like practically.
It would mean valuing things that right now the economy just ignores. Clean air, water, healthy ecosystems, those social connections, how strong they are.
Stuff that matters, but doesn't have a dollar sign on it.
Right, and it'd mean actually factoring in the costs of things like pollution, climate change, using up those resources we talked about.
So it's like taking a bigger view, counting both the good and the bad.
A more holistic view, yeah. And Grantham, he believes this is essential if we want a truly sustainable future, one that's not just based on endless growth on a planet that's, obviously not endless.
This is all really thought-provoking, but I can already hear some folks saying, this is too idealistic. It'd mean changing everything.
Sure, that's a valid point. And Grantham, he gets that. These changes, they won't be easy. He's not naive about that. But he says we got to start talking about it NW before it is too late.
But call to action then. A wake-up call to change our priorities, start making different choices.
Exactly. He believes we do have the power to shape a better future. But it takes, a real shift in how we think, willingness to challenge how things are done now.
Powerful message. So after this deep dives into Jeremy Grantham's world, the bubbles, those long-term challenges that call for a new kind of progress, what's the one thing you want our listeners to walk away with?
Good question. I think the biggest takeaway is this. We all have a role to play in creating that better future, more sustainable, more fair for everyone. It's not just up to governments or big companies. It starts with each of us. The choices we make, how we live, how we invest our money, even how we just interact with the world around us.
Great point. We can all make a difference. And speaking of making a difference, if you found this deep dive insightful and you want more ideas like this, well, be sure to subscribe to our channel. We'll be back soon with another deep dive into a topic that hopefully you'll find just as important. Until then, keep learning, keep questioning, and keep diving deep.